What's going on, everybody? Another week of What the F Happened. Joined here with my partner in crime, Mr. Snaggy, in the house, back from the sickness. But here's the deal. How low can it go? This is like limbo. Where does the market keep going to? Is there a bottom? Have we even come close to the bottom? Well, our trader has something to say about that, and so does the news. Target, just today, we all know Target, right? Or Target. Target's shares plummeted 20% today because of inventory problems. They can't get the goods. That's normal, right? You can't get anything. Can't get fridges, can't get stoves, can't get anything. Hell, I was trying to get an air conditioner for one of our flips. Nope, out till September. Okay, great. We're just going to roast. But those are some of the things. But then to put the icing on the cake, Joe Biden comes on, our trusted leader comes on and says to the world, he's going to fight inflation by raising corporate taxes on the wealthy. Well, Bezos had a little something to say about that. He's like, you dumb piece of shit. What the fuck does raising taxes on wealthy and on corporations have to do with inflation? Well, Joe Biden's press secretary, or whatever her name is, I don't watch the news at all, but she couldn't answer that either when asked by a reporter. Listen, all of these things are good, great, and fine, but these are the topics we're going to cover on today's episode of What the F Happened, and there's a lot more. Stay with us. We are back with What the F Happened, a weekly review where Snaggy and myself, we rant, we rave, and heck, pre-show, they get me fired up just so that I'm fired up for the show, so that somewhere, somehow, I will argue with somebody. Whether or not that happens today, we're going to find out. But the fun thing is, let's talk about the markets and what happened in the past week. One of the things that I find interesting is, whether it's Walmart or whether it's Target, they're struggling. But who else is struggling? Our trusted FANG stocks. So Facebook, Apple, Amazon, Google, Netflix, they're all posting lower than expected outlooks. And also some of their earnings aren't quite where they need to be. But let's talk about Target. Stephen, what do we got going on with Target here?
Yeah, so after a few days of the Dow rising and the stocks kind of rebounding just slightly, we're off to a rough start to today, down 300 points so far, with Target leading the way. Target plummeted 22.1% in pre-market trading after the retailer reported an adjusted quarterly profit of $2.19 per share, below the $3.07 consensus estimate. Revenue and comparable store sales beat forecast, but like rival Walmart yesterday, higher costs ate into Target's bottom line. And we did see that with Walmart yesterday falling over 11% in its trading hours and another 2% this market in pre-trading. And it's happening across the board, like you mentioned, Chris. I mean, Lowe's with what you say during the intro, the refrigerators and the stoves and all the stuff that build houses. You can't get any of it. Carrier Global is an air conditioning company. They're falling, can't get anything done. I heard on the news this morning that Shanghai over in China is shut down again, and COVID's locking everything down again. So this isn't going to be better. And we'll talk a little bit about gas prices and diesel and what's going on with that too. But the markets are off to a rough start today.
Absolutely off to a rough start. It's like, every once in a while, because I have to say that, you have this up day and, everybody's happy. Oh, everything's going to be okay. We found the bottom. We're bouncing. Buy low, buy low. I got to laugh, folks. Maybe I just know too much. Maybe I've been just doing this too long. Or maybe I just laugh at the absolute stupidity of investors out there. Like, they watch the news and they see Warren Buffett buying positions. Now, Warren Buffett is sitting on more cash than he's ever sat on. The only thing he was investing in back a while ago was buying Berkshire Hathaway, because he said the smartest thing that I can invest in right now is us, our company. So right now he's been buying some shares, but when you really look at how much he's buying, the news wants to say Warren Buffett's buying the bottom when others are fearful, be greedy. Nobody's fearful yet. Like, that's preemptive. That's too soon. Like, that's getting excited before you even get to the show. Like, great. You can have excitement, but don't take action right now. It is a massive mistake. Just because Warren Buffett's buying, he is buying, like him buying a couple $1 billion of something is like you buying $10 to $15. I mean, not really, but you get the drift. If you're buying right now thinking that it's going to keep going up and we found the bottom, you are so out of touch with reality, or maybe you just don't know how to read price action. You don't know how to read charts at all. And you certainly have not even looked at history to see what has happened in other periods of time that match and look just like today. Because I'll tell you something, we haven't found the bottom. We're not even freaking close to the bottom. What you're seeing right now is a minor gust of wind. Like, walk outside, you're walking, there's no wind, then all of a sudden a gust comes out of nowhere. You're like, oh, that was nice. That felt good. It doesn't mean you need to go build a sailboat because it's just going to continue to be windy and you're going to be a professional sailor. I don't know where that came from, but folks, don't act right now. It isn't time. We're not at the bottom. If you buy right now, you're going to get slaughtered. Now, if you're a professional trader and you're buying and trading the levels and the different, support and resistance lines, awesome. This is a great opportunity for professional traders to make great money. But the problem is, what direction are we going to go? Everything I've ever learned about the markets, everything I've ever learned about stocks is you have to determine a direction. What way is the market going to go? Are we going up? Are we going down? Are we going sideways? You have to wait for confirmation of a direction. Are we in the bull zone or are we in the bear zone? Right now, you're in nowhere's land. We don't know whether we're going to be a bear market or a bull market. The bears and the bulls don't even know. The bears are wondering, should they come out of hibernation? What are they going to do? And the bulls are just confused as always because they don't know what the fuck's going on. But if you're making decisions for your investments right now, unless you're playing the protection game, you are making massive mistakes. And sorry, this is our shop cat, Lazy Cash, decided to join us. So I just give the fair warning, and I don't even know why I care half the time because nobody really wants to listen. But if you want to do something really smart with your money right now, protect it. Because that's what the wealthy are doing. The wealthy versus the rich. You know what the rich are doing? They're buying Gucci. They're buying new shoes, a bunch of those Nike SB fancy things. They're buying Lambos and Ferraris, or renting them for that matter. They're going out there and acting and looking rich. You know what the wealthy are doing? Hunkering down, prepping, and preparing for the biggest opportunity of their lifetime because they're not willing to give their wealth back. The difference between wealthy and rich is the wealthy found out and learned how not to give the money back. Where do you want to be? You want to play rich? Great. You'll be the next poor person. Everybody knows it except for you. When you're walking down the street and you see someone dialed up and decked out and all the Gucci stuff, you know what you should know? They probably got no money. That's right. They're probably broke, acting rich. And then, you've seen it from all the wealthiest families out there. When you look at them, what do they look like? Normal, average people. Look at Adam Sandler. That dude just is himself eating his pickles. He doesn't give a shit. He's got enough money to buy your house, your neighbor's house, the entire neighborhood, and then sit there and say, what neighborhood am I going to buy next? That's what the wealthy are doing. So, Stephen, where do we go next? Should we talk? Should we even go and touch gas? We
can do that. And just reading over the markets a little bit more, Warren Buffett, Jack Bogle's reading, financial planners agree when stocks are down, don't watch the market closely. So it's all the same things you kind of always hear, if it's just a ride, as long as you don't sell when it's down, you're not actually losing money. And that's easy to say unless you need the money right then, right? So it's one of those things where there's no strategy. I don't think anybody knows what's going to happen. Our professional trader, Sodi, has been wanting to come on for the last month every week and call the bottom to the market. And then all of a sudden he says, oh, wait a minute, maybe we're not quite at the bottom yet. Let's wait another week. So even he, technical traders that really, really, really know their profession are thrown off by what's going on. I am the least technical trader when it comes to the stock market. You guys know I'm not a big fan of the stock market, and, I can read charts and all that, but it's not my thing, right? So I look at anecdotal, I look at like common sense type stuff, right? And common sense tell me, how the hell does the market go up from here? We've got to see a pullback and a crash just from common sense is what I look at. But when you read all these different people that are telling you different things, it is hard to know what to do. So the advice you're telling right now to people, Chris, I just love it. Either have that strategy or protect your money and be prepared for those opportunities. And that's what it's really all about. And, when we look at gas prices, the reason we bring this up is not only is it breaking into your pocket and what you're paying and money that's coming out of your family's wealth, but it affects everything. I mean, diesel prices are through the roof right now, and that's how supplies get around the country is in airplanes and in trucks. And when that stuff costs a lot of money, it's just going to keep increasing prices, increasing inflation. So this is a big, big problem, and it's not easing whatsoever right now. I mean, look at these prices, Chris.
I know, but there's at least there's a plan, Stephen. At least the government has a really solid plan to deal with inflation, and that is just tax the wealthy and tax corporations. I mean, hey, that's the solution, right? Tax, 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 tax. We work and make money and we pay tax on it. Then what do? When we buy property, we pay tax on that. When we buy gasoline, we pay tax on that with already taxed money that's been taxed probably twice at that point. When we have property, we pay property taxes. Hell, we pay taxes on everything 4, 5, 6 times. You buy your car, you pay sales tax. You sell your car, you pay tax. You constantly keep paying tax. So that's clearly the answer. So I'm just really happy that our government has a game plan to fight this inflation, and that is just tax more of the citizens, tax the wealthy, tax the corporations. That's going to work, right? You tax the corporations, you make them pay more in tax. The goods and services will then become more expensive. Everything will become more expensive. Guess what? You just created your own new environment. But hey, fuck, at least they got a plan, man. That's all I got to say.
Yeah, I mean, it's all Putin's fault and Russia's fault anyway.
Right, so right. Oh, of course.
That's what it is,
yeah.
Right?
It's my cat's fault too. I mean, lazy cash here. I mean, it's inflation. Just blame it on the cat. It's a lot easier. We got Jenny Oyervid. Sorry if I butchered that. He said something that makes a lot of sense, and all of you should know this because somebody Cynthia here on YouTube said some company just bought an entire neighborhood for $45 million. That's a small chunk of change. But BlackRock, Vanguard, Blackstone, and then he mentioned BHHS, which I don't know what that is, but all of them are connected. Of course they are. They're all playing the same game, folks, and it's not your game. It's a whole different game that you can't play. You never can play. You can watch them, but be careful because you're not playing the same game. It'd be like you're a football player and then you go to play, you go to play tennis. Are you going to be a professional tennis player just because you're a professional football player? Hell no, folks. Play your own game. Don't play somebody else's game. They'll win. You won't. So the best thing right now, somebody had asked me if I'm a broker. Absolutely not. So I want to be clear about that. I am not a broker. I don't manage money for anyone. I did that for 16 years. I'll never do it again. I let my Series 7, 66, 63, all those stupid security licenses, they all expired. It was like, I cracked a bottle. I didn't crack a bottle of champagne, but I definitely cracked a beer the day that those things were gone forever, because that world is toxic. I know it from the inside at a level, and I don't talk about it publicly much, and I'm not going to today, but no, we are not brokers. We are simply investors ourselves that know a whole hell of a lot more than most of the average people. And we teach it to you in a way so you can digest it at a 5th grade level, whether you take the advice or not. Whether you want to believe your way or our way is right, everybody's entitled to their own opinion. I'm not saying you need to listen to us. Hell, you can keep staying invested in the market. Someone mentioned dividend stocks on here. Great. If that's your thing, keep buying dividend stocks. That's perfectly fine. But just understand, when your stocks, your dividend paying stocks, your almighty blue chip dividends, when they go down 40 or 50%, are you still going to be okay holding them for the dividend? If the answer is yes, carry on. It's like that movie, Carry On, Wayne. Great. Carry on, Wayne. Like good to go. But if you can't handle it, if you can't handle the heat, get out of the kitchen. This is like the wild, wild west right now. It's not unprecedented, but you can see the outcome. Like if 2 guys are out there and they're doing that thing where they're going to draw, right? Someone's going to die. That's all there is. So think of the markets just like that. You got 2 guys in the street. Everybody's watching on the sidelines. So they're getting ready to draw. For a fact, one of those 2 are going to die. But you're still watching, being like, man, who's it going to be? Same thing for the stock market. In order for someone to make money, somebody's got to lose. In order for somebody to lose, there's always got to be a buyer. There's a buyer and a seller and a winner and a loser in the stock market. What side do you want to be on? That's all you need to ask. Here we go. What do we got here?
Well, history agrees with you. Buying the dips is a dangerous game. Piling, according to Bloomberg, piling at the wrong time after the dot-com bust could have left you out of pocket for more than a decade. So it just goes to show, we always say you can't time the markets, unless like you were saying earlier, unless you professionally know what you're doing, probably best to stay on the sidelines right now and
I
just
agree.
wait and see.
I agree. Play the safe game. I mean, listen, like I'm a professional trader. I've been doing this for over 20 years. And you know where my money is? Not in the stock market, not one penny. The only stocks or ETFs that I own are 20 plus year US Treasury bonds. I own two ETFs. One is zero coupon 30-year bonds, and one is an ETF that averages out Treasury bonds at 20 plus years. And then I've got the VIX, because I believe the volatility is going to go wacky here soon, and I'm hopefully going to profit on that. That's it. That's the only exposure I want outside of our private holdings and our private hedge fund. And then this one guy, I love it, Keyboard Warrior. He's probably 14 years old. So Mr. Keyboard Warrior, I love your name. It's a pretty cool name. You said, and I'm here on TikTok for money. TikTok does monetize. So, I got almost 200,000 followers on TikTok. They do monetize. So I think my check on TikTok's about 36 cents a month right now. So Mr. Keyboard Warrior, I'm here for the Benjis, baby, the 36 cents that they pay me for having 200,000 subscribers. You're damn right. That's why I'm here, right? That's what me and Cashy Boy here are wasting our time to do. No. There's a higher calling sometimes, Mr. Keyboard Warrior. When you grow up someday and you learn some wisdom, what you'll find is that you sometimes have to do things that are far above a monetary value. You have to do things that are a higher calling, and that's why we do this show. We don't do this to monetize. You want to buy something? I don't know. Want to buy a shirt, man? Whatever. But otherwise, keep tapping on that keyboard, buddy. You're doing great. All right. What else we got, Stephen?
Well, just talking a little more about the inflation thing. I mean, I think it's important because Jeff Bezos typically is a very, he owns the Washington Post, which is one of the most Democrat-leaning, news publications in this country, and they are constantly backing the policies. And so it's interesting when Jeff Bezos comes out criticizing Biden's inflation and the Democrat stimulus packages and blames inflation for the rising prices with their packages. So this was an article by the Wall Street Journal. It says the White House on Monday pushed back against Amazon founder Jeff Bezos after he criticized the Biden administration in two tweets over the weekend for tying the corporate tax structure to rising inflation. The tweets were spurred by one of the President Biden on Friday, which said, you want to bring down inflation? Let's make sure the wealthiest corporations pay their fair share. Mr. Bezos responded by saying the two issues should be discussed separately. Mushing them together is just misdirection, he tweeted. U.S. inflation remained close to a 4-decade high, April, 8.3%. Mr. Bezos, who stepped down as Amazon's chief executive in July and remain on the chairman, again tweeted on Sunday that the passage of the $1.9 trillion American Rescue Plan, which Mr. Biden signed into law in March, contributed to high inflation. He also said that Senator Joe Manchin's objection to Mr. Biden's other spending plans kept the administration from adding to that inflation. In fact, the administration tried hard to inject even more stimulus into an already overheated inflationary economy, and only Manchin saved them from themselves. Inflation is a regressive tax that most hurts the least affluent. Misdirection doesn't help the country, Mr. Bezos tweeted. So just a little bit more on that. It's just interesting to see that kind of back and forth going on.
It is, whether it's Elon Musk or Bezos, two of the wealthiest men in this country. They're not the wealthiest in the world. If you really wanted the wealthiest, you'd have to look to people that you will never find out how much money they have, like the Rothschild family and the Rockefeller family. The Rothschild family is estimated, and this is completely unconfirmed, but estimated to have a net worth of over $100 trillion. That's like that, that $100 trillion, because that's a lot of freaking money. But they're definitely by far the wealthiest, but you'll never know that. They are so private and protected. They don't want anyone to know. So Elon and Bezos have a lot of clout. And if they're going against what the president's saying, I think the folks down in DC really need to rethink what this bumbling mess talks about and says, because you're picking a fight with the wrong people, and you're going after the wrong people. These are the people that provide tens, if not hundreds of thousands of jobs. And not that anyone wants to work these days. Everybody's self-employed, making money. I love it. I got a comment back from my friend, and he made a nice comment. Keyboard Warrior is not 14 or 15. Keyboard Warrior is 50 years old, and Keyboard Warrior wanted to pat himself on the back and say that he or she just bankrolled on Tesla over the past 2 years. Well, congratulations. Tesla was a good play. You made some money. Now let me challenge you to keep it. Just like somebody just challenged me that they're going to guess what color my underwear are. And if they get it wrong, they're going to give me 20 roses. Well, you probably get it wrong. I don't have any on, but nice try. So, you bankrolled on Tesla. Now keep the money. In order to keep the money, you got to have an exit. You got to know when to hold them and when to fold them. But, hey, I'm happy for you, man. You made some money. And that's what we want everybody to do. I read your channel.
Tesla's had a rough quarter. So hopefully you got out when it was up at 1,100.
Yeah. So let's go on to another topic here. So, that was really important to, and all of you probably read that topic about Bezos and his rebuttal to, what the White House or what Biden was saying. And, me and my wife were talking about this today with Biden. She's like, I don't hate Biden. I'm like, really? And she's like, no, because he's just a puppet. He's just a puppet that's saying what they want him to say or trying to say what they want him to say. And, maybe there's some truth to that. He's a trained career politician. They're all puppets. They say what the higher power tells them to say. And the higher power, we probably will never understand that. You can read the book Creature from Jekyll Island. That might tell you a little bit about it. If you're religious, you might say it's Satan. I would agree with Satan sitting somewhere in one of those seats in that board of the Fed. But, it is what it is. You can all have your own beliefs. And that's cool because we are in the greatest country in the world, the United States of America, where we have something called freedom. And it's the freedom to vote for who we want to, the freedom to say what we want to. It's the First Amendment. They're trying to destroy that. We covered that. But, that is why we live in this country, because of freedom. That is why there is massive amounts of people at the border trying to get into this country, because they understand this is the land of opportunity. But the land of opportunity comes at a price. And that price is one most of us are not willing to pay because we've all had it too easy for too long. And my friend, my late friend, Stephen Arnio, wrote the book, Hard Times Create Strong Men and Women. That's right. We haven't seen hard times. Gosh, you could go back to the 60s before we saw hard times. It's been a long streak of good times, and they're about to end. And they're going to end primarily because of our decisions, because of our inability to just band together and do what's right to protect the one thing that matters in this country, and that's freedom. But politicians have figured out how to buy votes. They have figured out how to buy their way into these seats where, hey, it's all about the Benjis. It's all about the money and power and control. Look at China. We all know China, you don't have freedom. How long they've been locked down now? How long? Like, we all remember being locked down. We didn't like that, right? But we dealt with it because there was an unknown to the pandemic, unknown to COVID. Well, those unknowns are, I'm not going to say gone. There's still things we don't know about it, but I don't want to say it's fully under control, but it pretty well is. I've had it twice now, and I kind of know what to do. You take lots of vitamins. I got to keep myself in shape. People that have underlying medical issues, well, listen, get vaccinated if that's what protects you, if that's what you want, But if you're healthy, I don't know. You got a good argument. The antibodies are the best thing. So once you get COVID, you got the antibodies. From what science says, quote unquote, that's one of the best defenses to it. But if now, Steve, we got something on here about New York. I live in New York, okay? And New York, like, our COVID cases are going up. I see it all around here. I mean, I don't think I know a single person, not one person that hasn't had COVID, not one. And I know a whole bunch of people right now that are quarantined because they have COVID again. And you know what COVID is for almost all those people? The last time I had it, which was just a few short weeks ago, it wasn't even a cold. Like, my symptoms weren't even as bad as getting a cold the second time around. The first time sucked. And Stephen, you had it as well, but your symptoms were pretty harsh too. But that was early on, right?
Yeah. Last August.
So the reason I'm talking about this is not to have a discussion about COVID or the pandemic. The whole reason I'm talking about it is, are they going to try to drive fear again as we get closer to elections? Are they going to try to, highlight the COVID cases going up and try to make us start wearing masks and put us into quarantine again? Are they going to start doing the same things that they did a couple of years ago? Are you ready for that? I don't know. Are the markets ready for that? Is the economy ready to be shut down again? Because China wasn't. I can promise you that. And we weren't either, because we rely on a lot of goods and services from China that right now are shut down. We just are not feeling the effects of that. Plus, we're not feeling the effects of the sanctions that we put on Russia. Those sanctions are just about to start kicking in. So the wheat that they provide us from Ukraine, one of the largest wheat producers, that's going to start hitting us. And you'll start seeing more and more food shortages. Not only that, fuel. We bought an awful lot. Russia was one of the top 5 providers of oil to us. No more. We're not buying oil from them. They had a little bit of a runway where they fulfill on the orders, but that's going to end. So if you think gas prices are going to go down because our government's going to tap into our strategic reserves, you're kidding yourself. Look at the pumps. That's the real story.
Yeah, they've actively made it where we can't produce, we can't do our own oil. It's crazy. I mean, and I don't think people are ready for lockdowns. I mean, we weren't ready for the first time. You know, I saw this come out. Verizon Wireless is investing $149 million in Florida because from January 2020 to April of 2022, 250,000 plus Verizon Wireless customers moved to Florida. In Orlando, traffic is up 408%. Miami, 364%. Glaze, 271%. Fort Myers, 173%. So everyone's flocking to where there were no restrictions. There were no lockdowns. I mean, I heard this morning, New York City is now not requiring, but strongly recommending that anyone over 2 years old now wears masks indoors, which is nuts.
So today is my daughter's second birthday. So now, like I live in New York. So now they're suggesting my 2-year-old puts on a mask. I want to be clear. My 2-year-old has never worn a mask in her life. She watched us wear masks, which I think probably might be a good thing because it allowed, her when she was an infant and a child or a baby to read eyes. It's a lost art. We've forgotten how to look in people's eyes. But I think a lot of the COVID babies and the young folks of today have had to get good at looking into people's eyes because we couldn't see our mouths for a period of 2 years. I'm trying to look at this as the glass is half full, trying to have an optimistic look. But my daughter's too, and I'll promise you one thing here and now, my daughter's never putting a mask on. If my daughter goes back to flying and she has to wear a mask, I'll fly private. That's it. Or I won't fly. That's all there is to it. Like, it's just not going to happen. Not that I'm against masks. Like, my mother is health compromised. She's vaccinated and boosted, and she wears a mask when she goes out. That's good. She probably should. If you've got underlying health conditions, you should probably protect yourself. But again, we live in the United States of America, like the land of the free. To each their own. Everybody understands what the risks are, but like for them to start locking things down again, I will promise you the markets are going to fall and crash and burn on their own, but just based on what the Federal Reserve is doing with raising rates 7 times. Then they're going to unwind the balance sheet. You haven't seen that yet, folks. All this turbulence in the markets doesn't even factor in, maybe it factors it a bit, but the government's going to start spinning off $95 billion every month from their balance sheet, which is just going to be selling off bonds into the open market. That's going to crush the markets, crush them. It has in the past. I mean, heck, Stephen, you got a thing here about mortgage rates, right? Mortgage demand, like our almighty real estate, right? It's been going up. We're all sitting pretty in real estate. We're making so much money right there. Stephen, talk to him about what's going on with mortgage demand.
Yeah, I mean, so
pay attention.
Yeah, I mean, as you see, weekly mortgage demand from home buyers tumbles 12% as higher interest take their toll. The average contract interest rate for a 30-year fixed mortgage with conforming loan balances, which is, non-jumbo loans, decreased to 5.49 from 5.53%. So we're hovering around that 5.5% mark for mortgages right now. Mortgage applications to purchase a home fell 12% week to week and were 15% lower compared with the same week 1 year ago. Applications to refinance a home continue their landslide as well, falling another 10% week to week. So if this trend continues, we will see a slowdown of the real estate markets. I have a good friend of mine in Miami that sells luxury condos. She has her and her husband have a $35 million listing right now. And I was talking to her about it. She said that it's the luxury market's definitely starting to slow. They're not getting as many offers. Now, on the contrary to that, I have another good friend of mine I sent a referral to in downtown West Palm Beach overlooking the Intercoastal and Ocean. And this property I sold to a lady about 2 years ago for $180,000. We listed it for $395,000. We got 20 offers, and it just we accepted one all cash, no inspection, 15-day close for $425,000. So that market of that $500,000 range seems to still be going pretty strong. The luxury stuff seems to be slowing a little bit, and that's, in my opinion, a sign that we really need to pay attention to because it does trickle down as things slow.
I agree. And, a lot of people are like, oh, the raising the interest rates hasn't affected the price of homes. That's because you're seeing the trickle down effect, like you just said. I mean, like right now, like me and my wife have flipped, lots of houses, had a show on HG or pilot on HGTV and everything. And we have 4 flips going right now. One just hit the markets and, yeah, we're hoping for like a crazy price, but that's not because the market's sound and strong and everything's good. That's because in the last couple of months, a lot of people have sold their houses, took major profits, and they need somewhere to go. And they're sitting on a good chunk of cash to then deploy into the next house. And unfortunately, that's going to continue to raise the price until all of a sudden it crashes. There is a balancing point. You want to know what that is? Well, go back in history. Just look at 2006 and 7 and then 2008. I'm not saying
the all cash thing's interesting, right? Because that's exactly what's happening. People have cashed out of these highly appreciated homes. People have cashed out of the stock market, these highly appreciated stock assets and crypto assets and all this other stuff. Well, guess what? We have been at historic crazy highs. So as these things start to pull back and come down and potentially crash, that cash is gone. So where is the cash going to be to continue to buy these properties? It's not going to be there. Where is the lending going to be to buy these properties? It's not going to be there because these rates are going through the roof right now, and we're restricting all monetary policy right now. So it's going to take time, but we're going to see this change, seeing it happen right now, but it's going to start to accelerate, in my opinion, over the next 6 months into the end of 2022.
Yeah. And, like no matter what you look at, like we're looking down the barrel of a major recession, which will probably eventually turn into a depression this time. And it's primarily because of some things like what Greenspan said. Many of you probably didn't see the article of Greenspan. Heck, some of you probably are too young to even know who Greenspan is. But he came on and said that the Fed acted too late. They acted too late to this problem, which when you act too late, a lot of times you try to get on top of the problem and you act too aggressively. The Fed has done this before. The Fed has sold off parts of their balance sheet and sold off treasuries or let them mature out before. Not to the tune of 95 billion ever. That's about double what they've done, but about 45 to 47 billion for a very short period of time. And that led to a pullback in the markets very severely. So every time the Fed has unwound the balance sheet, all except for one time, has resulted in a severe recession. The rising interest rates on top of that, 7 rate increases this year alone, that'll definitely be the nail, in the coffin, if you will. That'll be the final straw. And then they're not buying any new bonds. You already see big companies like Target and Walmart and, all the ones we mentioned earlier and many, many more are suffering, from Netflix to Amazon's even, seeing problems. And the other thing, then you got to look at the economic cycles. We're at the end of the long-term debt cycle, at the end of a short-term debt cycle, way past the end of a short-term debt cycle. And not only that, productivity is on the decline. And why is that? People don't want to work. The government just gave checks out and made it so that everybody could just sit back and not work. I saw a thing the other day. It said, don't like your job. And then there's like a bunch of little tear-offs at the bottom. It said, quit. Like that's the mentality. I don't know how people are making money. I mean, they're trading, they're doing all sorts of things. Good for them. Just like, our friend on TikTok here who made a bunch of money in Tesla. But what happens when all that goes away? People then will want to rush back to get jobs, but the jobs will be gone. The recession will be underway. This is the reality, folks. Like everybody's going to be late to the game this time, unless you're not. Unless you saw this coming, you saw the storm coming, and you started to prepare. Unless you've been listening to us, whether you like what we say or not, doesn't matter. There's logic behind all of this because it's all based on history. So when you really kind of look at what's going on, just look around. I mean, Goldman's, so we all know Goldman Sachs, right? Goldman's Lloyd Blankfein says the U.S. should prepare for a recession. This is notes from, we have a full-time trader for our hedge fund. These are his notes. He said the theme is COVID variant returns, businesses exit Russia, and salaries on the rise across the board, but workers still not willing to come back. Finland, Sweden set to sign NATO and enter in a historic shift. I mean, what's that going to mean? How's Russia going to retaliate? Like there are so many headwinds. If you pictured you are the airplane, I want you to envision yourself being the airplane and you're flying. You are flying in an environment with unprecedented headwinds, everything from inflation to all these things I just said. Your plane isn't going anywhere fast.
And the guy that's in charge of all this is is basically saying we're not slowing down either. We're going to
No.
keep pushing more and more headwinds. We're going to keep pushing stuff in this economy till we can slow it down because inflation's just too crazy right now. So Fed Chair Jerome Powell said he will back interest rate increases until prices start falling backwards. If that involves moving past broadly understood levels of neutral, we won't hesitate to do that, said Federal Reserve Chair Jerome Powell to the Wall Street Journal. And we will go until we feel we're at a place where we can say financial conditions are in an appropriate place. We see inflation coming down. We'll go to that point. There won't be any hesitation about that, he added. So they are all in on doing whatever they have to slow this thing down. And that could create a very ugly, ugly image moving forward for.
Yeah. So
for
if you guys, if you all don't mind, I can translate what Jerome Powell said to a fifth grade level. Jerome Powell and all that stuff he just said is saying, we will not hesitate to crash the markets and the economy. Make no two ways about it. Do you understand? That's the translation. They will crash the markets. They don't care because they're going to try to get ahead of this. But you know what else they're trying to do is they got to get interest rates up because they know they're going to crash the market. He just said that in simple words. If they know they're going to crash the market, then they got to have the ammunition to pull the economy back out of a deep recession. And that is, they got to have the interest rates back up a little bit higher so they can drop the hammer again and then print more money. Modern monetary theory, that's the new way of doing things. You know, that's the new economic theory they're using. They want to print money because to the Fed, debt is the best possible thing they can do. And you know why? Because they control the almighty dollar. And as long as the almighty dollar is what oil is traded in and is the reserve currency, they have an unlimited supply of that. So printing that means money for the Fed. And just so you all know, the Fed, and I can't believe any of you wouldn't know this by now, the Fed is not owned by the U.S. government. The Fed is a private institution of bankers. Who? We already talked about that. I don't know. Read Secrets of the Federal Reserve. You get a couple of the families, but you will never uncover who all the families are that make up the central banks and the Fed. But I promise you, at the head of that table is the one person we all know, and his name is Satan. There's no two ways about it. So you can believe what you want. You don't have to believe anything we're saying, but just be logical in everything happening here. And someone here on TikTok made a good comment. They said gas companies are keeping gas prices high. Of course they are. Of course they are. Like they're profit businesses. They want to keep gas prices high. Just because gas prices are $5 to $7 across the nation, like they're not going to come down just because they open strategic reserves. The gas companies want to make money. And under the last administration, gas prices were really low and gas companies were having a hard time making record profits like they are today. So whoever said that about oil, you're absolutely right. Like they're making record profits. And then somebody else here, Phantom Wee, said inflation will create record profits for all companies. So talk about how inflation makes the richer, and he stopped there. But you're right. Inflation is good for big companies because it drives price of things up. But everything that goes up must what? Come down. And that's what you're going to see next. And
listen, I mean, people, Chris, you, me, people, I mean, we're not really worried about inflation. You know, we've talked about that in the past. I don't give a shit what I pay to fill up at the gas tank, right? But inflation is a tax on the middle and lower classes. Like it just, you can read about it. You can study it all you want. So blaming the rich, blaming corporations, taxing them more, those are bullshit talking points at the end of the day. It's not solving anything. And it's leading to more and more cost and inflation. So you're just running in a vicious circle, spitting out those talking points those people on TikTok are saying right now.
Yeah. You know, listen, like it doesn't matter, you know, stop playing the divide game. Like this country should not be divided the way it is. Media has done that to you, just so you know. Media has divided this country, not you and I. The media has made you want to divide it. It's not red or blue. Okay. It doesn't matter what side of the fence you're on. You're entitled to be on one of the two political sides. That's why you live in this country. It really is. But don't make it all about one is better than the other. They're both corrupt. They both have problems. And they both right now, to me, okay, seem to want to destroy this country. But eventually, maybe you'll see the lone, you know, the one person come in that will try to save it. We've already seen this in the past, but obviously, like, just we're not even going to go there. But you just sometimes have to understand it's us, not them. It's us that's going to save this country. They'll destroy it. They'll keep printing money. They'll keep making profits because, hey, a president's in for what, 4 years, maybe 8 if they get reelected. That's it. Then after that, they're done. But then they sail off into the sunset. They've padded the coffers. They've made all the money they need. They don't care what happens 10 to 20 years down, but you should, especially if you have kids. If you have kids, the world, the country we live in that we call the greatest country on earth will not be the greatest country on earth anymore because we're destroying it. We are. Stop blaming. Stop sitting there pointing to, red or blue or this president or that president. We are the ones that are destroying the country by being divided. Take some responsibility for your actions, not blaming. That's what I hate most about the president right now. The dude just blames. Fix the fucking problem, dude. You're the president. Fix the problem. Stop blaming Russia. Stop blaming everybody else and get off your ass and do what you are fucking paid to do by us, your fucking taxpayers. Excuse my language, but you know what? Fuck it. I don't care anymore. We're destroying this country. And until we band together and try to fix this shit, it's going down.
Yeah, it's funny you talk about we as the people. I was just, trying to find some positive news. I feel like it's all recession talk and the markets are crashing and things. So I was just looking for something positive. So I was just kind of looking at, what's kind of held things up. And especially when you look at the crypto market, it's investor confidence, it's investor sentiment. And that's really kept us positive and going for the last couple of years. But then I run into these kinds of articles where home builder sentiment falls to a 2-year low on declining demand and rising costs. So it's just not even investor sentiment and investor confidence is high right now. Even that's starting to really hit some all-time lows and declining fast. So it just really makes me worry on what we're going to see coming up here very soon, Chris. I hope that Sodi's right and we have a bottom and we're going to see a pop coming back and a rebound. But maybe that's just setting us up for even a bigger fall.
Well, Stephen, let me talk about that. Sodi's looking for a bottom for the last leg. He's not looking for a bottom for the markets. Like if you read what he sent us, what he's looking for is the bottom for the next leg. And we're probably only going to see one more bounce up. So any of you that are still in the markets, worried about your losses, worried about when the market's down, there is probably going to be one, I could even maybe say 2 more bounces back up to test the highs. I don't think we're going to see new highs. Now, maybe I'm talking Wall Street stuff, but the highs are where the highest point the markets ever were. Look at the S&P or the Dow. That's the highs, right? The markets will probably test those highs 1, maybe 2 more times, but I find it highly unlikely that they'll even get close to testing it. So what our trader is saying is he's waiting to find the bottom for where it's going to bounce to then again run one more test, one more bull run for a new high, and then it's going to let loose. His anticipations of when it will let loose could be July to August. Some of the economists we talk to and read, they're talking end of the year, end of 2020 could be like where we really start to lose it. And then 2023, I don't even know what to tell you. I hope you're freaking ready. You got 2020 or you got 2022 to get your house in order and get your finances in order. Because 2023, that's when what Warren Buffett says is really going to be important. When others are fearful, be greedy. You can't be greedy if you didn't prepare for what's coming. Here we go. Look at this. There you go. There's your chart.
There's your high.
The Dow Jones industrial averages right there. There's your highs. You can see where we're at now. We are not at low points because if he were to extend this chart out, he's only looking at 2021. If you were to extend that out, there you go. There's your lows. Okay. Your lows are what were set during the pandemic. You all remember how low it went there. That was a nice level right there. And I think we can test lower than that. But that level lines up with 2008. So where we went, that's not as low as 08, but it's lining up with the different levels of 08 to 2011. Okay, which were not good times. And many of you don't remember that, but I do because I was in Wall Street during that time. Like you can see, here's your chart. That's the pandemic. Stephen, go back to the pandemic and TikTok and Instagram. Listen. So like, let me just draw this for you real quick because this is really, really important, right? So if we come over here, well, here, actually, I've already got it drawn. Let me just show you this, folks. This is important. And TikTok and Instagram, it's going to be backwards, but you can get the idea. I want you to see something here. If we were to look at 2008, I know that was a long time ago, but in retrospect, it really wasn't. This is about where we were, right? the post-financial crisis. The S&P closed at 676. 676. That's your low. Could we see that again? You bet your sweet ass we could. And we very well may. Then it bounced up. We had some flash crashes. Many of you don't remember this. This was really bad. This is 2011. I remember my clients were freaking out in 2011. And that was the U.S. federal government had a credit rating downgrade. It was the European sovereign debt crisis. Greece was going bankrupt. They thought the whole European thing, the euro and everything was going to go down. It didn't. They printed some money, but this was bad. That's another level. If I was to supersede this level to where we're at today, and I don't even have it, folks, this is where the pandemic went, which is, just looking at this, it's like this far from where we could go. So the floor, 2008 or 2011, anywhere in there, that's the real floor. The pandemic was way the hell up here. So if you're thinking that the markets are going to fall to the pandemic levels, you're not going far enough. Because the next level right there, and Stephen's got it up on the charts, the next level down, because it went straight up. The next level down is, when that one song, I can't remember, going down. Yeah. The next level is here, folks. There's no stopping points. You're going right from where we're at now, straight down. It's only going to stop maybe at where the pandemic brought us down to, but that's a weak floor. And if we hit that floor with enough momentum and volatility, it will go further. So when you really sum that up, let me break that down in simple terms for TikTok, Instagram, YouTube, and Facebook. In simple terms, that's about an 80% fall from where we're at today, not from where we were at our highs, from where we're at today. That's a 60 to 80% fall, depending on whether we stop at 2011 or stop at 2008. Now, the question is, do you really think it could go that far? I don't know. That I can't predict where the bottom is, and I can't predict where the time is or the top is, and I can't time the market. Nor can Stephen, nor can anyone. Not Ray Dalio, not Warren Buffett. None of them can time the market. But if you just logically thought about that and you thought, well, it is possible that we could go to pandemic levels, okay? It is possible that we could go to 2011 levels. It is possible that we could go to 2008 and 9 levels. If it's possible, all I challenge you all with in the closing statement here from me is, if it's possible, why wouldn't you want to plan for it? Why wouldn't you want to plan for the worst and hope for the best instead of plan for the best and hope for the best? That's a failing proposition. And you know what? TikTok, based on a lot of the things that came in, many of you are planning for the best and hoping for the best. You're going to fucking fail. I'm sorry. I don't mean to be an asshole. But you and your family are setting yourself up for one of the biggest failures financially you will ever see in your life. You don't have to believe me. The history proves it all. The levels prove it all. The markets prove it all. It doesn't need to be me or Snaggy telling you this. It needs to be you just being logical and responsible. But I'm sorry, we've all lived in such good times for so long that responsibility, out the window, blame it on somebody else. All of you need to read the Dr. Phil book. I know you're going to laugh about that, but the one that talks about you taking responsibility for everything that happens in your life, because it's your problem no matter how the problem came about. Oh, you got sued? That's your fucking problem. Deal with it. Oh, your business partner took money? That's your problem. Doesn't matter that your business partner took money. It's your problem now. Deal with it. That's life, folks. And until we start taking responsibility for our own actions, which is super hard, trust me, believe me. Like, I sit here and I say this, but at the same time, sometimes I'm guilty of it as well. Of course, I want to blame people when things happen. When you become more and more successful, the one thing I will promise you will happen, people will try to take what you've built. People will try to take what you've earned. And just because they try to take it, what are you going to do? Blame others? Well, that guy did this to me and blah, blah, blah. No, it's your problem. Deal with it. The problem's going on in this country right now. The problem's going on with the markets. The problem's going on with everything from inflation to supply and demand problems to everything else. Did you create those? No. But whose problem are they? Yours. Deal with it. Plan for it. Get ready, because it's going to get a lot worse. Stephen, what do you have to say about that?
I'm with you, man. I wish I wish people would take responsibility for their actions. I wish people would stop blaming everybody else for everything else. And I think when we start getting more personal responsibility, it'll start to improve things. But until then, I think it's a rough road ahead. I mean, you see a lot of stuff going on. I mean, even just recently, just overnight, yesterday, today, U.S. soccer, just to give you an example of this, U.S. soccer reaches a historic bargaining agreement with women's and men's teams, stating that they're going to all have equal pay. So every player, man or woman, will be paid exactly the same on the U.S. soccer teams, which is interesting stuff right there. I don't
Only
know
took
what
a
to
couple
make of
hundred
that.
years for us to get there, but we got there.
Yeah, it's a good discussion, and we don't have to get into it too much right now. But when you look at this as a business, the men's soccer teams bring in a lot more money. So should they be rewarded for that, or should they all be treated equally, and should it be spread out? And I don't know the answer to that one. It's an interesting thing. I just don't like the way that this was gone about and happened. But at the end of the day, congratulations to the women's soccer team
For
for
sure.
getting paid. I mean, they are a really good team. They win World Cups, so there's an argument to be made there where they are winning tournaments and World Cups and things like that, where the U.S. men's teams are terrible. But then you put up an under 15-year-old men's soccer team against the women's World Cup winning soccer team, and the 15-year-olds beat them. So it just goes to, I mean, it's just an interesting conversation. But things like that are happening, and the whole equality and equity and all that, and it's definitely an interesting argument. But
So Stephen, let me comment on that. Someone just came into TikTok. Phantom Wee came in with an interesting thing about that. He said equal just means that the payroll budgets would be the same. That's an interesting way to look at it. And again, we're not experts in this. I mean, good for the women. Like really, like it's great. But the simple fact is like, the men's soccer league or, any of them, if one league brings in more money than the other, like the budgets can be the same, but, somehow one has to stand on its own 2 feet. It'd be like at your job or wherever you work, if you work twice as hard as the other guy in your division, and let's just say you're commissioned, right? So you make a lot more because you hustle and you work harder and you got better relationships because you've earned those relationships. But then your boss just comes in and says, hey, even though you work twice as hard, you have all the relationships, and you make triple what this guy makes, we're going to level it. We're going to give you both the same budgets. We're going to give you both the same pay and that. Now, I know that's not equal in how I'm saying it, but it's kind of the same way of looking at it is how do you distribute the income that those leagues bring in and spread that out? The budgets, listen, I'm super excited because I think, I know a lot of women. I know a lot of women in business, in big corporate jobs. They hustle and bust their ass and they earn everything, but a lot of them don't make as much as the men, but they work harder than the men. So I think there's still a long way to go in that, but we're at least getting there. And I think that's good. I think there's still a lot of work that we all have to do on that. So it's tough to decide, how to take a stand on that. I say kudos to them and awesome. So one person here, Stephen, did say something. They said, give us solutions. We're talking about the problem, but what are the solutions? So I can't give you one silver bullet solution. What I will tell you is we do have events that give you lots of solutions over 3 days. We have one coming up in July 29th, 30th, and the 31st here in Buffalo, New York. It's beautiful here in Buffalo during July. And we're going to be going deep into the solutions. So now let me change from giving you guys free advice to now saying you're going to have to pay to come here. That's right. You're going to have to get your own plane ticket because I'm not paying for your plane ticket. You're going to have to pay for your own hotel. That's right, because I'm not paying for your hotel. You work, you want to learn, get your ass on a plane, buy a ticket, and get a hotel.
Your money.
And you are going to pay to come to the event because we're going to give you a ton of value. And it's going to cost you a whopping $297. So if you're all interested in coming to the event, the link, and Stephen, I'll have you post it up, and for TikTok, you can write this down, is Money School REI, moneyschool.REI.com/July-events. That's it. It's very simple, and you can go to chrisnaugle.com and you can register there.
I don't think that's a hyphen. I think that's a dash.
Dash, I'm sorry, dash, not hyphen. Well, he'll post it up here, and but if you're interested, it's not hard to find it. It's all over social media. TikTok, you don't have to look far to find that. moneyschoolrei.com.
I mean, at the end of the day, Chris, it's their money, right? Like you said, it's their money. So you can make the decision. Do you want to spend that money on a plane ticket and a hotel and a ticket to the event so you can come learn how to make more of your own money? Or do you want to just sit back and relax and wait for the stock market and the markets to take your money from you? Because one way or another, that money's going to flee you. It's just a matter of if you're going to play that roller coaster game or if you're going to take back control of your money and control it yourself. So that's the end of the day.
An old Joe came up and asked, are we doing events anywhere else in the country? Because some people just don't want to fly to the East Coast. It's a long flight for them. The answer, Joe, is yes. Starting fourth quarter, starting in September, we have hired my friend Mitch to be our event coordinator. We're going to be doing events all over the country starting in September, and we're probably going to be doing an event each week. They're going to be little pop-up events. They're going to be themed after your favorite movies like Step Brothers or National Lampoon's or Vacation. They're going to be all themed events, but they're all going to be designed to give you solutions, to teach you how to take back control of your money, to show you how to get ahead of this storm, but it's going to be fourth quarter. So all of you, let me ask you all for a favor. We pour our hearts out every single week. We do this for free. We also have the Wealth Webinar Series, which is free every Wednesday at 1 p.m. Eastern. You can join us for that, for more solutions, because that one's a little bit more solution than this show is. But here's the deal. If you're in a part of the country, I don't care where you're at, South Dakota, if you're in South Carolina, North Carolina, if you're up in Maine and you're like, oh, nobody ever comes up here to teach us, reach out to us. Send me a DM. Send Stephen a DM. And if you can put together a small little pop-up of 25 people or more, we will get in our plane and we will fly to you and put an event on. That's why they're called pop-ups. They don't have to be hundreds of people, 25 or more. If we show up and there's 5 of your buddies there drinking beer, I'm going to be pissed because it costs about, on average, the plane takes about $4,000 for us to get anywhere on the East Coast. So just know that we're putting our money where our mouth is to come out and put an event on for you for free. Your only responsibility is put 25 or more responsible people that actually give a shit about saving their financial futures in a room, and we'll fly our ass out to you and we'll put an event on. So if you want that, if you think that would be something that would be valuable to you right there, reach out to us. And I got to show this. It's a TikTok here. There you go.
That's Mr. Burr. Mr. Burr and Mr. Naugle, the Step Brothers.
That's it. Me and Mr. Burr, the Step Brothers. You guys have all seen the movie, but we're happy to fly out and show you the solutions and teach you what you need to do and show you how to be back in control of your money. And that's what we're going to start doing starting fourth quarter. We're going to do a whole bunch of pop-ups, a major commitment for myself, my team. Snaggy has been practicing every single week so that when he flies out to you, man, he's going to bring the heat. I watched him last night on he did a pop-up live that we do every Tuesday night where we teach you the infinite banking concept. Crushed it. So are you ready to change? Are you ready to get ahead of this? Are you ready to plan and prepare to save your financial future and your family's financial future? If you are, put a room together. Put 25 people in. I don't care if it's in a freaking barn. Just make sure you got some cold beers for us after the event and make sure there's 25 or more people, and we'll fly our ass out to you. Can't land in your back field, but just we'll find a small little runway by you to land, and we'll come out and we'll wow you, give you solutions, and give you the path to how you can take back control of your money. Stephen, I think that's about all we got here.
Yeah, the only other thing, just mention, like Blake just said on the comments, if you're over on TikTok, make sure you join us on YouTube, and that way you can interact actually with the comments. So go to the Chris Naugle and search for Money School TV and subscribe and follow those channels. And that's where we live stream these, so you never miss any of them, and we can interact with comments too. TikTok's great to watch live quickly, but if you really want to be part of the show, make sure you hop on YouTube.
Yeah, so all you on TikTok, if you enjoyed this show, definitely go over and subscribe to my YouTube channel. There's 2 of them that you should subscribe to, at the Chris Naugle and also the Money School TV. We're going to be doing all of our lives from there, and plus it's a little more interactive, like Blake just found out. And somebody here on TikTok, Ty Talk 135, I think is it, asked about California. Absolutely. Like I mentioned East Coast because I live on the East Coast. So I'm going to be, flying our plane around the East Coast. We're not going to take our plane to the West Coast, but Delta has bigger planes that'll get us out to the West Coast. Definitely not American, but Delta will get us there. And not only that, we have Devin out in Arizona. So if you want Devin Burr, he's pretty famous on TikTok, to come out and speak, great. Book an event in Phoenix or somewhere around Phoenix. If you're in California, it could be me or Brent, or maybe I'm working on this. We have literally a what would you call that? Dan Clark. What is he? He's a world-renowned speaker. He's spoken for presidents and political, people. Hall of Fame. He's in the Hall of Fame of speakers. Well, he's going to start doing events for us as well. So if you're in California, Salt Lake City, or around that area, you might just get so lucky as to have literally the legend, one of the greatest speakers of all time, Dan Clark, who was a professional football player in his time, come out and speak on what we teach. So, folks, it's about to get real, and we're about to change everything in the way you think about money. So stick with us. If you're interested, again, go to chrisnaugle.com or go to YouTube and send us a comment, or DM me on Facebook or anywhere else, or hell, you can also email me at Chris, CHRIS, at The Money Multiplier. If you want to put together a group of 25 people or more, we will fly out to you. Send me an email, Chris at The Money Multiplier. That goes for everybody on TikTok, and we'll come out and we'll help. Thanks, everybody, for joining us. We will see all of you at 1 p.m. Eastern Time on the Wealth Webinar Series. And if you want to sign up for that, just go to chrisnaugle.com. It is free. Sign up, and we'll see you at 1. Until then, see you next week.